Okay, hi traders, Richard here again. Let's talk about how to recognize divergence. Okay, so we've got to remember that when we use an oscillator on any of these oscillators, most indicators are lagging, okay, because they're just an algorithm of price, okay. How do we interpret price, into a percentage or into some sort of stochastic type of algorithm of some sort? So what we really want to do is make sure that we understand that when we look at an indicator, the action has already happened. Okay, it's not a leading indicator. Most of our trading that we'll do will be based on leading indicators. That's support and resistance lines, like trend lines, Fibonacci, and moving averages. Okay, but what we can do is we can especially with newcomers to trading, you can use divergence to identify the possibility of a reversal or the possibility of weakening of price. Okay, so you may not want to continue on with the trend, or you may have a system around what are you going to do when you identify divergence. Okay, a lot of indicators you can see divergence in a lot of indicators, MACDs, momentum, stochastics, etc. But my favorite and the one that's most reliable for me is the relative strength index. Okay, we're not going to change any of the parameters. We're just going to leave it at 14, keep it Dodge blue, or whatever color you want it to be. But what we're going to do is now try and have a look at what this indicator is. Now, the interpretations of the indicator can be found in the notes. All of these indicators have multiple different levels of interpretation. Some are overbought, oversold indicators, or can be interpreted as that. Others can be used as triggers to get in or get out. And others will be used for divergence purposes. So all we're really going to be looking at with the RSI is how to identify divergence, okay? And we know what divergence means. Let's have a look at what divergence means. Divergence, it's in the notes. Divergence simply means the moving apart from a single point. Okay, so we've got divergence A and divergence B. A is becoming further away than B. Okay, and that's all originated from a single point. So what we want to do is we want to have a look at how do we identify divergence. Now, divergence is very good with double tops, right? But typically what we want to have a look at is what is divergence doing when price is doing one thing and the indicator is doing the opposite. It's diverging. Okay, so what we want to do is to identify is let's have a look at where we are in time, and I'm just going to draw this rather than actually show you in price. I'll do that. I'll show you in price second. Okay, so what we're going to do is from this point, let's just say this point in time. Let's have a look at this point in time to this point in time. Are we still making, in an uptrend, are we still making a higher high? Then are we making a lower high on the indicator? Okay, so let me actually try and find an example of this in price. Okay, here's a good example of it right here. Okay, price, we've made a higher high in price. In this uptrend, we only look for higher highs. And in an uptrend, if we draw we're looking at a new high made from this previous highest high, is the indicator relative to that point there, and this point here is the indicator across the tops making a lower high. Is that true? We've made a higher high in price, we've made a lower high on the indicator, okay, which is the RSI. If that's the case, then we have divergence, okay, because we are splitting away. We're continuing to make higher highs in price, but we're making lower highs on our indicator, which indicates weakness. Okay, There's not that much volatility continuing, okay, in the direction of the trend, so therefore there is weakness, and we may not want to continue going long if we identify the weakness, okay. And what we can also do is we can see here that we've got some sort of trend line coming up through here, and we've got the weakness, and then we've got the break of the trend line, don't we? Break of the trend line, okay. Break of the trend line, and then we've got this reversal. We've kind of hugged the trend line on the underside, and then we've actually turned around in the market, okay. So let's have a look at it in the opposite direction. Here is another good on the downtrend side. We've even got it back here, but let's have a look at it on just here. We've got these two lower lows. We've got two lower lows, which are making slightly lower than the previous. Okay. Okay, so we're making lower lows in price, and we look at the lows on the oscillator, we're making higher lows on the oscillator. Okay, so we are still it's still divergence, but it's the other way around. Okay, all right, so we can see divergence there. Let's have a look at this. We've got a triple. There's another example here which is pretty cool. I like it. It's between these 2 points here, and we're still making lower lows on price, and now we're making higher lows on the indicator. Okay, so that's divergence for you. Okay, see if you can go and do the same thing on your chart. Now, typically what we do is when we identify divergence, it's not a signal to get in, it's not a trigger, it's not, put your house on the market and put all your money on it type of exercise. All we want to do with divergence is use it as a filter. Okay, if we identify divergence, then we may not want to continue going in the direction of that trend, okay, because it signifies weakness. Okay, all right, I'll leave that one there.